Yeah! Good morning. What's going on? Wednesday. We have a little bit of news. Nothing crazy here today. We have Fed speaker. 30 minutes after the market opens, we have EIA crude oil inventories at 9:30 Central. We have the White House press briefing at noon. This is all Central time, by the way. 12:10, another Fed member speaking, and 2 o'clock. Trump at Women's History Month event, which will not cause volatility. So, slow news day here today. Let's see what we can get. Hopefully, we can get some additional range compared to the last 2 days. Yesterday and Monday were crazy low volatility. It was insane. The ATR on the bars was 15 down to 12 on a 2-minute bar, by the way, by like 10-11 a.m., which is that makes our lives a little more difficult. So hopefully we get a little bit more today. If not, that's okay. We'll see what we can get. Pre-market here, getting a little bit of chop. But what's up, guys? How you doing? How you doing? Hey, can you add Bullinox to your pool of accounts and get codes with them? After I test them, I can. I'm not gonna just go get codes with companies that I haven't tested, but I could test them and then see if I like them, and if I do, I'll get a code. Yeah, Take Profit Trader, I love, and I have a code that I have not said anything about. It's same code, BIG. It gives you the best deal with Take Profit Trader. The codes, listen guys, at every firm that I have codes at, it gives you the best deal. Otherwise, I wouldn't have one with them. That'd be stupid. But yeah, it'll always give you the best deal. Same with Apex, BIG. Take Profit Trader, BIG. Yeah, man, VIX has been low. Makes our lives a lot harder. Squeezed out a little green day yesterday on one trade, but we did all right. Can't complain. 6 minutes out from the open. Honestly, I don't care which direction we go here, as long as we get some kind of movements. Coming into the open pretty much flat. You know, at this point, I wouldn't even mind giving up 20K. I mean, hate to say it, but if it meant we could get some range back, some 40, 50, 60, 70 range bars, point range bars, to clarify, I wouldn't hate a big old dump off here in the market. That's the thing a lot of people don't seem to understand about traders, is that, you know, with us, when we're seeing a big bear market, like, yeah, it sucks because you open your portfolio every day and you're bleeding the long-term stuff. But the worst time to talk to a trader, and the time to actually be concerned about a trader, is it when the market's going sideways for 6 months and the range is way down. But the people asking, I don't think will really understand that. Does Take Profit Trader give you a discount on resets? So the way that Take Profit Trader resets work is, yeah, you can pay to reset a test for $100 across the board, which is relatively cheap for their test. And then and that's slightly cheaper than buying a new one at Take Profit Trader, by the way. To buy a new one at Take Profit Trader is a little bit more expensive across the board, but it varies. But you can reset for $100 across the board. And you can also, the thing that makes them a little different at Take Profit is if you blow a funded account, which they call a pro account, you can pay to reset the pro account and just go right back to pro. And you can do that 3 times. It's more expensive. I think the 25K account is $450. What's the size of their biggest one? I'm running 2 of, I think it's $150. I have 2 of those. Haven't had to do it yet, but if you blow a 150K, which is their biggest account, pro account, you can reset for $1,500. But you can take payouts day 1, so that's how they justify that. And I think if you're in a hurry, well, that's a bad way to say it. If you don't want to spend 5 days in a new test, I think it makes sense to reset it if you're obviously taking payouts. But it's definitely cheaper to just do another 5-day test. But, you know, there's a time investment there. And opportunity costs. The average true range on Ninja. Just an indicator. Just go in, add ATR. You can set the parameters how you want. And then you can overlay the range. A lot of people have trouble with this. You guys see that indicator at the bottom? This is NinjaTrader. All that is the teal is the average true range, which I have set on a 2-minute chart to 10, which tells us the average true range of the last 10 2-minute bars. Those orange vertical bars, that's just the range indicator overlaid on the same area. That's it. It's not one indicator, it's 2 overlaid together. So what I'm doing is I'm comparing the range of the current bar to the average range of the last 10 bars, which I want to know. Because that's real, right? That's not some BS indicator like having 50 EMAs on your chart, which isn't going to work. I just want to know, hey, what's the range? How volatile is this thing compared to the last, 20 minutes? 90 seconds out from the open, baby. Never gets old. Forex. So Forex, do I have any interest or experience? No, not really. Not really either, honestly. With Forex, it's very popular in the East, Asia. I think they have probably the most Forex traders on the planet. But the thing about the Forex market is that it's extremely efficient. The futures market is pretty efficient too. I would say that Forex is probably slightly more efficient than futures, and efficiency, it makes it more difficult to find edge. So you look at like a momentum stock, they're highly inefficient because when they release a news headline and go from $3 to $30, no one knows what it's worth. So everyone's making bad decisions, right? But with Forex, it moves, sure, but at any given second, the price is very efficient. So it's really hard to find like those, 55, 45 probability wise setups, especially in Forex. So no, I probably out of trading everything, actively trading anything, my 2, or I guess the 2 that I have the least interest in pursuing are going to be Forex and crypto, because both of them have problems. Forex is just too efficient, and crypto is too spready and just gambly and rampant. There's the bell. Let's see what we get here. Probably going to give this market 5-10 minutes to clean up, then I'll start looking for something. But crypto lately is a straight up casino, and that's fine if you want to gamble on meme coins. I have no problem with that. Have fun. But you're not trading. They're a very fine line. I do not care which direction we head this morning as long as that range can expand compared to yesterday and Monday. We need more volatility here. Is Forex harder to manipulate? Well, the bigger you get in terms of dollars at play, the harder it gets to manipulate, because the more money you need and the more influence you need if you're going to do so with influence. So if somebody goes on CNBC and they pump a stock with a $30 million market cap, it's going to be a hell of a lot easier to manipulate than trying to manipulate Apple. Because to manipulate Apple is very, very hard. You would need a ridiculous amount of influence, or you would need to be Apple themselves, or you would need a ridiculous amount of money, which basically no one has. Way more than billions. You would need, well, to do any kind of manipulation on Apple, you need tens of billions, if not hundreds of billions of dollars to even start moving the thing. You know, a few billion, you're not going to do much to Apple. Well, here we are testing the 20 on the 2 minute. Then gotta let this clear up off the open. I give it 10 minutes. Yeah, penny stocks are different. I don't trade pennies. I trade that 2 to 10 range, 2 to 20. If the market's really hot, 10 to 20 opens up. If the market's average or cold, I'm more in that 2 to 10. Those aren't pennies. Pennies are below, in my opinion, below 2. Technically, they're below $1. But I call anything in the $1 range still a penny because, you know, liquidity really picks up around 2. If you can help it, don't trade pennies. The spreads are too big. If there was edge there, I would trade them. There's not, at least that I could ever find. Well, here we are testing the low of the day. Look up top here. We are getting a 40-point range, which is light for this time of day, but not too bad compared to the last couple of days. Anytime I talk about ATR, look at that teal flag at the bottom. Anytime I talk about range, you're looking at the yellow flag on the bottom. Okay, just for context. Tesla down about 2.5%. Nvidia down about the same. Yeah. Gotta let this clear up. Let's see if we can form either a channel or a trend. Coming back up for the retest of the open of that big red bar. Now, I know a lot of you guys were trading evals yesterday. Are you still trading evals or are you trading funded now today? Sure, some of you probably passed yesterday, but I mean, yesterday was a tough day with volatility being so low. But I'm curious how that went. Evals. Well, keep it up. Keep it up. If you blow the eval, don't get discouraged. I know a lot of people have their heart set on a single eval, but, you know, they're inexpensive enough that you can learn a lot. Going through 1 or 2 rounds, 3 rounds. Good work, Matt. Well, here's the retest that open of the big red bar. Now listen, some of you guys that, if you blew some evaluations, did you do what we talked about, you know, Monday, Tuesday? Write out your business plan. Write out your expenses that you're willing to put toward prop trading, and write out your goal as far as revenue generation. And then determine how long on average in your business model do you want to hold on to PA accounts. Because you're not going to hold on to them for 20 years. If you try to do that, you're never going to get payouts because you're not trading aggressively enough. You're going way too conservative. And the rules are not going to allow for you to trade that small and make any kind of considerable money. Now, if you're looking to pay a phone bill, sure, fine. But if you're looking to make like a life-changing amount, you have to be inside of the bell curve, okay? Where you're not attached to accounts, but you're not blowing accounts every 3 days. Because that, you're never going to get to payouts either. Not too conservative, but not too aggressive. And you have to live somewhere in the middle. Somewhere in the middle, okay? Whether that's you go through accounts every 3 weeks or every 3 to 6 months. Write out your business plan and figure out your averages along the way as you get more revenue coming in as far as payouts are concerned. And you start seeing, okay, how big can I trade to hit my average duration for holding on to a PA or funded account? Hanging up right around this 20 EMA on the 2, you see on the 5-minute top left of your screen, rejecting off that 20. And the Nasdaq lately is kind of it's just hanging out around kind of break even on the day, down 0.2%. I really want this thing to pick a direction. Happily, I'd happily see it pick a downtrend, honestly. Mark, for a beginner, do you recommend going slow on my first few evals? Yeah, to learn. And then once you are convinced that you have some kind of an edge, even if it's small, then what you should do is you should actually, I don't think I've ever mentioned this publicly, there's a very good data website. It's called coda.io, coda.io. It's free. I have zero affiliation. I have no idea who made the website. But you can go in there and run an equity curve calculator based on big sample sizes. So you can run multiple like simulations based on data that you input, okay? And it'll tell you the result of each different simulation just based on the data. Now, obviously there's human error involved if you don't achieve the win rate you input, or if you break rules and hold on to losers, then it's all out the window. But that'll help you come up with kind of like, okay, what size should I be trading? That'll help you get a starting point. What are you comfortable with? How likely is it that you blow the account or fail the eval? How likely is it that you pass based on the data that you estimate you're able to maintain? Everybody should be doing that. If you have no idea and you're just trading 5 minis because that's what so-and-so on YouTube did, you have to understand that on you know, you guys, if you're just trading, it's a different business model. Okay, maybe a little bit more being conservative is better. But you can't be so conservative that you never get to payouts. I think you have to be willing to cycle through a few accounts here and there, put the ego aside and understand that, yeah, your expenses go up, but so does your revenue generation, most likely, if you have an edge. By the way, this all changes when we're talking personal accounts. I'm talking prop right now. They have rules that you have to try to work and be one of their winners. If they don't have winners, they go out of business because there's no carrot to dangle for prop firms, right? But if they have, you know, too many winners, then they have to adjust their rules to stay in business. So their rules are always being adjusted. Usually it's kind of a race to be more attractive. So they're all kind of pushing the limits, implementing new rules, and then all the other prop firms kind of wait to see, okay, do they go out of business? And then they implement them. So the rules are getting more favorable for us. But you have to understand that they have to make money. So they're all in a balancing act. How do we make this the most attractive to traders as possible, but make sure that we have plenty of losers? Chris, good work. It's great to hear. Okay, so we reclaimed that 20 on the 2-minute. Now we are kind of hanging up on the 20 on the 5. These bars up top, we're seeing a lot of wicks, okay? So the market is a little bit indecisive around that 20. which is fine. But we're also, you have to understand, we're only 30 points away from a test of going green. So that's also something to consider. ATR, the range on these bars is not massive. All right, we're sitting kind of like below 20. There you go, Mark. Good work. Keep it up. That's a good range to sit in. 300-400 a day per account. And listen, a lot of people, guys, you know, I think there's this expectation that you have to make, you know, 2,000 a day per account. And depending on how much money you currently have, if you're already, you know, very rich, obviously, maybe you might want to go for that. But it doesn't matter how much money you have, because within the rules of the firm, that's too much risk. On every account size, by the way, even the 300Ks at Apex, that's just too much risk. You know, especially because a lot of people take like one trade, they're risking 3,000 on that trade with like a $6,000 drawdown on the, you know, depending on the account size. But that's numbers that you guys get used to seeing, right, from YouTubers. So, but you talk, you know, $300 per account. If you're running 30 accounts across multiple prop firms, I mean, you're making plenty of money. You can worry about scaling later, but keep the dollar amount per account reasonable and then just scale the accounts. There's no reason to go nuts on just 3 funded accounts. You can get a lot of accounts across a lot of firms, assuming you trust your copier. Which, you know, yeah, I had a problem with ETP, the copier, but they made it right and they fixed it. And they took it very seriously. The same problem happened to 4 other people. So 5, including me, and they made it right. And so the 2 copiers that I like the most right now are ETP and Replicanto. They're both very good. Okay, so there's that bounce test heading up into kind of opening territory, testing above there, now fading. Let's see if we get a test of the intraday low, which could potentially start forming a downtrend on the day if we do. But I want to see if we end up forming an ascending channel instead. Hopefully the camera stays nice and cool today. I opened up the back, which was a good tip from a photographer we had in here yesterday in chat. I have a fan on it. A lot of wicks here. So you guys see a lot of those wicks. That's indecisiveness here coming out of the market off the open. But here we are coming into 8:45. So it's time to start forming something so we can get going here. This is that region that'll chop you up. This is at best 51.49 right now. There's just nothing definitive here right now. Like, I know a lot of people just took a short off that 20 EMA, but I mean, look, we just recently broke it. There's basically no edge there, and if there is edge, it's extremely small. That you would need a massive sample size to start showing that. Would have worked for you here. Doesn't make you a genius. You know, you take that trade 1,000 times, maybe you have 0.5% edge, which is good, You know, 0.5% edge is great. You look at Vegas was built on a 1 to 2% edge. But, you know, their sample size is huge. So as traders, we need a bigger edge than Vegas needs, because our sample size is much smaller. All right, there we go. Let's get a test of that low and a break downside through. Maybe start forming a downtrend day here. Trend days are wonderful, but they're more rare than everybody thinks. A true trend day, everyone's always betting on a real trend day, but it's pretty rare to get a true trend day. Here's the test of the low. There's the break, taking out a couple of stops. Let's see if we get some continuation down into 20,004. And when you get that first test like this here today, there's going to be buyers below that level. So usually what happens is you'll take out some stops, assuming no news. You'll take out some stops, get you a bit of a push, and then you usually get a break back upside as buyers step in, because, you know, there's going to be stop outs, long stops, which is selling pressure right below that wick, that test to the bottom that we got off the open, which pushes you in the, deeper, a little lower. But then what you have is a lot of buyers buying the low of day. So that adds buying pressure as the stops get stopped out, and a lot of times you get a little bit of a bounce. What happens from there is very up in the air. There we go. There's the test of 20,400. Those round numbers, obviously, like 20,000 itself is going to be tier 1. 20,500 kind of tier 2. Every $100 whole number from there is kind of a tier 3 level, still relevant, but less relevant as you go down the tiers. The range is creeping upside a little bit, still sitting in the mid to low 20s here. I'd love to see that pick up. If we can get that up to, you know, 30, 40, that's a big improvement from yesterday and Monday. But here we go, getting that downside test we were just talking about. I'd love to see a nice big, because you guys know, like, downside moves typically increase volatility quite a bit more than upside moves. That's why, you know, puts will oftentimes experience IV pumps at a faster rate when you're going in the money than calls do, because the VIX IV tends to rise more quickly on down moves because of human behavior. Downside moves tend to happen more quickly than upside moves. Stairs up, elevator down mentality, right? So, since we're in dire need of volatility here this week, a big downside trend day I would not hate to see. I mean, people lose money, which I hate to see, you know, long-term investments, but for traders, which is priority number 1 since we're here, I'd love to see a huge downside trend day. Because we need volatility, because it's flat lately. You guys know what I'm looking at now, don't you? I'm interested to see if this becomes a thing. Right? We have 2 touch points now. If we see a third, all of a sudden we have a down or a descending channel. A pretty aggressive descending channel that's likely to flatten out as we get further into the morning. But if we see that hold up, this is still what I would call the second touch point, by the way. And we see 3 clean touch points, all of a sudden that becomes a thing. But to be honest with you, right now, since volatility, we need to see more of for us traders to make money, then I'd prefer to see that break, to be completely honest with you. There we go. Getting a push downside here. Beautiful. And I really want to see that trend line break, and it did. I wouldn't be against, listen, if we had a 3, 4, 5% red day here, great. But I'd love to see a big old red day, honestly, because volatility is so low. But we're seeing it creep up here, look. It's actually 25, the ATR now, which is great, but not good enough. You know, oftentimes that'll be 60 this time of day, so. interested in selling a little pullback here. You see that we're getting wicks on these 2-minute bars, top right of your screen. We're getting these little wicks, which tells me that people are trying to prop this up. Buyers are trying to step in and prop this up, but they're failing. These are not the strongest bear bars ever. Yes, there's a lot in a row, but they're not extremely, extremely strong. So I think what we're seeing here is buyers really trying to prop it. We might see them just get flattened. And then you would see some strong bear bars. So I'm interested in selling a pullback here if we can get one. There we go. You see that? Buyers stepping out of the way. There it is. There it is. Now we're getting a big old move. Look at that. 55 on the range of this bar. That's good to see. That's very good to see. Hopefully we can get some people waking up. Now that bear bar closed closer to its low in relation to the size of the bar. Which, what does that tell us, right? It tells us the buyers are stepping out of the way a little bit. But you have to be wary of capitulation bars, which that doesn't look like that big of a deal to me. Well, here we are getting a bit of a pullback now. Bit of a doji here. Typical short little reversal setup, but I'm not convinced yet. I'm not convinced yet. I don't think the buyers are going to win that easy. Though, you see that last bear bar, there is an argument to be made that the sellers are exhausted. Okay. Not yet convinced. Market has to prove it to me. Now, right now, if you're sitting short, what you want to see is the buyers here get disappointed, meaning there's not enough filling in. The sellers reload, come back in, and kind of stomp it down. Now, that bull bar, you're not seeing a close at or really near the high. It's a bit off the high. Okay, it's not the most disappointing bar ever to a bull, but it's not encouraging by any means. So we'll see if the sellers step back in. Here we go. Buyers stepping in a little bit here. Immediately getting stomped. This is a battle right now. Buyers trying to take this thing for a reversal. See if they can. You know, again, the way that the sellers are really stepping in and the buyers are trying to reload, getting shot down, trying to reload, getting shot down. Yeah, we're seeing some consecutive bull bars. I'm just a second leg down here would not surprise me at all. You see those bull bars kind of weakening as they go. You get that doji, an attempt at a reversal bar, and then a big doji. Now understand also there's going to be some stops from longs getting in. Where is every buyer going to set their stop? Every buyer in the last 6 minutes, right? Well, just below that curl. Okay, so if we get a test of that downside and a pop through, it would not surprise me if we see a push downside to, I'd say about 20,300. Just off the stop loss liquidity. But that requires an actual test of the downside, so we'll see if the sellers can take it down here. Gotta be honest with you guys, I want to see these buyers get stomped out. I just want more volatility, and if these buyers take it higher and we hang out in the middle of the range, you know, the whole range on the day so far really is about 160 points-ish. So I really would love to see these sellers take it down the whole day 2, 3, 400 points, just light a fire on this market. Get people out of bed. This thing has been dead the past 2 or 3 days. And you know what? If it takes a 4% red day to get people up, so be it. Not to mention, honestly, big trend days, especially for like if you're trading evals, which I know a lot of you guys are. I really hesitate to use the word easy, but you know what? It does. It makes it a lot easier to pass evals because you're not dealing with that trailing drawdown on big trend days. So for a number of reasons, I'd love to see this baby drop 4.5% today. But the range lately has been pretty shallow, so let's see if we can actually get anything worthwhile as far as a downside move. Again, really what I'm looking for is I want to see a test of that downside curl, really this region here. Some stops, if we could get a break of that, would push us probably to about 23. And then, then things change a little. All right, here we go. Let's get a test of that intraday low. Boom, there you go. There's 23, as we said. Now it's a matter of can we push downside through 20,300. There's the buyers stepping in like we talked about earlier, right? Stuff repeats all the time. You get those stop outs triggering, and then buyers try to step in, and then what happens from there is very shows a lot more decisiveness out of the market, but it's a lot harder to predict. Morning, Bigfoot. Good to see you. Again, until the market proves itself, I'm still thinking short side here. Could be wrong. Don't listen to me. But that's what I'm thinking until we start really testing some lows, getting through 20,300. But I'm also a big fan of staying as dumb as possible till the market proves you otherwise. Another downside test here. It's going to push through 20,300. Yeah, buyers are going to step in and try to hold that. Remember, that 300 level, it's kind of like a tier 3 level. It's going to be less relevant than 20,500. It's going to be much less relevant than 20,000. But you're going to have some buyers there. Yeah, I'm kind of looking at 20,290 region as kind of a short-term target. I really want to see a follow-through on that break at 20,003. Exploit the vibe. You think it's going to want to test that gap at 20,051 this week? I trade intraday. So give me an intraday chart. Day to day, I'm not trading futures for a month at a time. So I'm not your guy to ask. But that gap, gaps tend to get filled. They have no obligation to do so within a week, though. So it'd be a complete guess. Not going to sit here and make a guess. But I want it to. To be honest, I want to see new lows. Just because of volatility. It's like, if you're not going to give me volatility, then take away all the gains. That's how I feel right now. Downside moves give you more volatility, and we need volatility. Nico, I have 12 PAs. I'm trading them one at a time instead of copy trading, so if I blow one, I don't blow them all. Thoughts? I think it depends on how deep your pockets are as far as getting revenue generation, and how quickly you want to take your business model for prop. If you're like, you know what, I'm willing to, spend, I don't know. If you're like, I want to spend, 25,000 and ideally a minimum of, I want to generate 100,000 in revenue or bigger or whatever. Then I think trading them one at a time might be kind of slow. But if you're like, I have, $500 to put toward prop, I'm going to trade them, but you have 12, so you obviously have more than that. But I think it depends how quickly you're looking to go and how much experience you have. The less experience and the more time you're willing to put toward it, the slower you should go. The more experience and the quicker you want to make the business model work in your favor, then I think the quicker you should go. I don't think we're done with 20,300. I have kind of a target down around 2290, maybe 2289-ish. I just don't know if we've seen a downside test through 23 that's satisfactory. Well, here we are, coming into 20,290. I'm more at choice, Eric says, I'm more at choice A, 25,000 to spend. I have about 3 years of this and now doing this full time. faster the better. Okay, well, if you have a business plan and you're convinced you have edge, then, you know, to be honest with you, if it were me, I think going one at a time is you're spreading out your trades over 12 accounts, and you're probably going to end up taking more trades even at the expense of quality. And more trades is not a bad thing. Over trading only exists if you don't have edge. But if you're trying to trade 12 accounts, you're probably going to end up taking more low quality trades, which starts giving away your edge. So, I mean, really, there's my opinion. Now, with all that being said, I think trading like 2 or 3 sets of funded accounts does kind of make sense if you're trying to slow down a little bit. And if you end up, you know, blowing a group or whatever, you don't want to go a day or 2 or 3 without funded accounts. Fine. That's a personal decision, though. I think trading in 2 separate groups makes a lot of sense. Yeah, Chris does that same thing. There you go. So again, I'm looking for kind of a true break of like 20,290. And there it is. There's the break. Which hits target. Good. Yeah, well, that puts us up about 1,200 on the day so far. See what else we can grab here. I'm still looking at this downtrend. Again, listen, guys, a test of 20K. I love it. We are my priority right now. Investors can wait. Okay, the long-term stuff, all of us, it can wait. But the trading, we need volatility now so we can beef up the long-term stuff, right? So trading volatility is always my #1 priority, even if it means big downside moves. Worst thing ever is a flat market. I don't wish that on any trader. There you go. What did we just talk about? Big downside move here. Let's keep this going. I want to see the bears take full-blown control. Again, the way I feel about this, it's like, you want to give me a sideways market? Okay, let's go. Let's see Armageddon. I don't care about the long-term stuff, man. Just give me volatility at any expense. I don't mind. Hate to see people lose money, but again, if you're investing for the long term, you can wait. That's the game you're playing. Gotta put us first. Listen, guys, if you haven't, if you look at your phone or your TV or your computer right now and you're not subscribed, come on, man. Live every day at 8:15 a.m. Central. If you really want to spoil me, hit the like button. There's my YouTuber stuff. You know what I would love? I would love to see a downside move toward 20,000. Look up top here, guys. See this ATR? We're creeping up almost to 30. Now, 30 is very, very average for this time of day, but to see 27 is good. That's higher than we've seen the last couple of days. Last couple of days, this time of day, that teal flag was looking at about 16, maybe 15 this time of day. So to see 27 is beautiful. That is beautiful. I would love to see that hit 50. To be honest with you. And if we see a bounce here, we're not going to get that. So keep the downside coming. Hey, there you go, G Strong. 2021. Started 2021. But yeah, man, it's been a little while. Oh, this downside move, I love it. I love it right now. Volatility by any means necessary is how I feel at this point. Look at that 5-minute chart. That's aggressive. So this is not a range day. This is a downside trend day as of right now, which is cool because you look at the daily chart bottom of your screen. We've seen so many range days as of late, basically 7, 8 in a row. You could argue that a few in here were a mix of range and trend days, but full-blown trend days again are rare, but they're good for us. They beef up volatility. Everything gets moving a little bit better. But right now, I'm thinking short. Stay dumb until the market proves you otherwise. Now, when you get these wicks and attempts at reversals, then you have to be a little bit more hesitant. But I still stay dumb until this trend breaks, which it very well may. Okay, but there's no reason to think that it's going to on every little bounce until it does. Futures are efficiently priced. They tend to move in during trends, they tend to be relatively smooth. Nah, Chris B, that might have been the case in 2022. Like someone like Kashkari comes out and starts speaking from the Fed. And the market was so sensitive to inflation talk and Fed speak, actually covered it a lot back then, that it would move on committee members speaking. Now, though, not so much. This move is happening because I said we need volatility, so the market's dumping off. I made a phone call. Just kidding. Stay dumb. Stay dumb. I would love to see us see 19 today. Doesn't mean we will, but I'd love to see it. Listen, guys, starting in 2 days, the tomb goes live. You notice the deal gets a little bit less every day, but today only, all of today, if you use code BIG at the link in the chat, you get 20% off for life on your subscription to the tomb. That is going to be the uninterrupted extended live stream every single day. It's going to be quite a bit longer than here on YouTube. Obviously, YouTube will remain the same, but the entire stream plus the extended stream goes to the tomb every day starting Friday. This is the pre-sale. Hey, Alex, yeah, let me just fire off some bad trades for you, brother. Come on, man. I'm trading. We're up $1,200 so far, but that's only one. We'll see what else we can get. Staying dumb here. I'm thinking downtrend until the market proves me otherwise. So really... Yeah, John, I'm not a big fan of counter trend. You just get burned too much. And Alex, here to answer your question, I'm kind of looking at this region, but I like to stay dumb, okay? And trade the trend until it proves otherwise. Buying reversals in futures is a good way to make a lot of money sometimes. but it's a great way to lose the portfolio a lot of times. So that's really what I'm looking at. Again, don't with futures, they're so smooth, they're so efficiently priced on trend days that you can't overthink it. You're not going to outsmart the market. Yeah, Gabriel, I'm sitting flat right now currently. Yeah, crude. So, okay. Let's see what we got for news. We have crude oil coming up. Now, as far as if you guys are trading prop, we have the EIA crude oil inventories in 1:45. Okay, now, I did not. If you're trading Apex, they don't care what you do as far as trading news. They care what you do as far as following the rules, but news. I did not get an email from Take Profit because, you know, crude oil is not going to be a number that they care about. Okay, but I'm still not going to trade the number just in case they decide they do care. But usually Take Profit Trader will send you an email that says, hey, you can't trade during this news event, and it's usually going to be big news events like CPI. But that number is hitting in 1 minute. We might see a little bit of volatility, but crude oil lately is not gonna, it's not gonna move things like crazy. And then we have that White House press briefing at 12 Central. So this is really kind of the trend that I'm watching. If we end up breaking that line, we'll just redraw it, and then we're watching the 20 EMA. And then if we end up breaking both of those with big bull bars, ideally growing and closing near their high above this trend line and above the 20. When you look at this high, right, you close above this high, really, 20,350. All of a sudden now you're thinking reversal, but until that happens, so G-Strong, the schedule is this. I'm live in both places, YouTube and the Tomb, starting 8:15 Central. YouTube ends at 10:30 Central. The Tomb goes until a minimum of noon. And it's ad-free and less delay. Hey Dale, how much is it after you pass your Apex eval? It depends. So they're running a sale right now on the 250 and 300K accounts. And if you pass one of those, it's an $85 lifetime activation fee. With all the other accounts, it's $85 if you want to go monthly for the activation, and it's $125 for the lifetime. Whichever one you pick, by the way, is going to depend on your business model and how long you hold your average account. Which again, I think a lot of people, they come into prop and they say, I'm going to hold on to these babies for 20 years. I don't think you're going to make as much money as someone who comes in and says, you know what? If I cycle through accounts once every couple months, it's no big deal. So if we end up breaking this trend line, remember, this is always a range, okay? So if we end up breaking that trend line, then I'm watching the 20. All right, but if we just break it a little bit, fade back downside, then we just readjust the line to where everyone else is gonna be drawing it, on average. Like if we make the best estimation of where the average person would draw that line, then we adjust it. But, I'm not convinced of a reversal just because of right now. Now, something really important in trading futures that you need to understand is that The earlier you enter, the lower your probability, but the lower your risk and the higher the reward potential. Okay, the later you enter with more information on a move, you've paid for that information. So you're going to get a higher probability of the trade working in your favor, but risk is higher, reward potential is lower. It's a spectrum. Decide where you want to sit on it. ATR as of right now is sitting at 26, which is better than the last couple of days. Not great, but quite a bit better than the last 2 days. So yeah, an edge can mean a lot of things. An edge at the end of the day is when you look at a big sample size of your trades, which considers everything, because your trades you take consider your strategy, your emotional control, your psychology, your discipline, risk management, right? How quickly you're able to get in and out, how consistent you are with entries. All that comes into play when you look at a big sample size of your trades. Ideally more than 50, but more like 10,000, right? The bigger the sample size, the better the data. An edge simply means over the biggest sample size you possibly can look at, are you profitable? If the answer is yes, then you have some percentage of an edge, which you can calculate. It's actually relatively simple to calculate how much percentage edge you have, and that data becomes more reliable the more trades and the more data you have, okay? Think of it just like a casino. They have an edge over you in blackjack. No one sits down at a blackjack table and thinks that the odds are straight up 50-50. And if they do think that, then they probably shouldn't be playing. So here we're going to get that retest of that trend line. Very, very common. And this retest is a tough bet to make. So I'm sitting flat right now. Green on the day so far, but flat as far as positions currently. Here's where a lot of traders start not knowing exactly what to do here. Because this retest, again, this is a big deal. This happens on most trend lines. Unless you see a break that's really, really aggressive on like news or something. You typically see a break at the trend line, then you retest it. Here it's like, okay, will resistance turn into support? And then if you see a reversal, you end up seeing kind of an ascending channel or an ascending wedge that you can trade the support line of. But it's so early in the attempt at development right now that this is such a hard call to make that I don't trade the retest like this. here we go. Here's that upside test to the 20. So we broke that trend line, and now we're trading flat. So it's interesting now to see, okay, do we break the 20 and actually legitimize a bounce? Or do we just have to redraw the trend line? This is that doji kind of sideways movement that is a lot of people get chopped up in. I find it's best to wait these few bars out, sit flat, let the market make a decision, then start hitting it. Look at this. You get this straight up sideways trading, guys. Now what do you have? You have two horizontal... You can't really call them trend lines because they're not trending. You have two horizontal areas of support and resistance. Horizontal levels are at a larger risk of breaking than ascending or descending levels, especially like a descending resistance or an ascending support, which are the strongest of the levels. Okay, aside from like 20,000 or whatever, like a really big whole dollar. So in a situation like this, you have very close to 50-50 odds, a total toss-up with both sides at very much so a risk of breaking. In this case, it's probably a little bit better, maybe 52-48 to the short side because of the overarching trend. Okay, but I really want to see which direction this thing breaks. Yeah, that ATR, we're now back into the low 20s, sitting at like 22 currently. I want to see that higher. See, this is why, guys, you get this bounce and you get some sustained sideways movement after a bounce. All of a sudden, ATR starts tanking. Which is why I want to see this baby down to like 19,009 today. That would be wonderful. Get a big downside move and force the volatility. But man, Monday, volatility collapse. Yesterday, still volatility collapse. Today has been a little bit better so far, but right now we're in that zone. Now, I know I've gotten this question actually a lot. It's like, okay, in a channel like this, can't we just buy the bottom, sell the top? Right? Kind of buy low, sell high scalping. Sell the top, buy the bottom. You could try, but it's at such a high risk of breaking. I truly have found that something like this has negative expected value because the probability of breakout in a normal channel is what? 20%? 80% of breakouts fail in a normal channel. This is, I think, is the probability of breakout is probably closer to 30, if not higher, which is going to render any edge you could probably find out the window. This tightens up. This needs to break. It will break. Tested a downside break here. What I'm actually going to do is we're going to extend this until we can eventually delete it. Stay away from scalping this channel. Until this thing breaks, there's nothing here for us. At least that's what I do. Do whatever you want. Honestly, a big break downside wouldn't surprise me at all. We're testing it. We're not getting a whole hell of a lot of movement, but there's going to be buyers right underneath here that prop it up at least for a period of time. But I'm a little biased. Yeah, see, there you go. I would love to see a big downside move. There's going to be a lot of stops on this curl, okay, which is liquidity, potentially for a push down toward 20,200 if we can get through this trend line that we're going to delete eventually. Well, no camera overheating so far today. I don't want to speak too soon, but I think I fixed it. George, why does your line start at 8:45-ish? I'm not sure what you mean. That's where the, I'm Central Time, if that clarifies. Otherwise, that's where the line starts. Or that's just where I put it. Uh-oh. Volatility's below 20. That ATR, that teal flag. I want to see that 30, 40. We're seeing volume, yeah, lighten up, volatility, lighten up. But This will sometimes happen. Then you'll return to that downtrend and volatility picks back up, which I'm really hoping to see. Yeah, right now with a trader mentality, it's volatility by any means necessary. If it means giving up 20K, so be it. So reward to risk, George says, what kind of reward to risk do you aim for? Depends on the trade. So listen, if I'm taking a breakout trade, it goes up because the risk of breakout, or sorry, the better way to phrase this, most breakouts fail, something like 80%. Okay, so reward to risk on that, I will take confirmed breakouts and then go somewhere between 1-to-1 or 2-to-1 reward to risk. Whereas scalping inside of a channel, everybody's terrified of negative reward to risk, which tells me nothing other than they don't understand the math. It's just a math question. It's not a question of right or wrong. You can have a 1-to-99 reward to risk, but if you win, 500 trades and lose one, you're making a ton of money. Right? So, and, high frequency algorithms do just that. Not with the exact numbers, but they do a lot of that. So negative reward to risk to me on futures makes a ton of sense in channels. Okay, because the risk of breakout is low, something like 20%. And if you can hit a whole bunch of 0.5 to 1 or even a little lower scalps, you're still making money because your win rate is high, which a lot of people miss the win rate factor of reward to risk. When people tell me, oh, I run 5-to-1 reward to risk, they wait for you to be impressed. That means nothing if you win 8% of your trades, right? Okay, so now we're getting that test where it's like, okay, do we end up having to redraw this at a little bit less aggressive angle? Or do we break upside through and start forming an ascending channel, like here? We only have 2 touch points really in either case. So this is where we wait for confirmation of one or the other and then start hitting it. Tested the upside of that trend line, I guess that I'd say horizontal resistance that we were seeing previously, and the 20. Expecting a little bit of a hang up here, but not necessarily enough to just completely immediately reject. Sometimes when you get a push through, you have so many orders ready to buy on the break of both of those things, or one or the other, but they end up at the same spot, that you end up seeing a bit of a pop through, couple of points, kind of like that. And then once you get those orders clearing, now it's a question of, okay, who backfills the new orders? And that's an up in the air kind of thing where you have to wait for confirmation. Okay, now if we end up seeing, I would say, A growing bull bar closing near its high. That becomes very, very definitive. This bar closes, by the way, in 30 seconds. But if we end up seeing a big old wick, what does that tell us? It's no indicator, right? It's not lagging. That's straight up data that, hey, the seller stepped in. So how this bar closes to me is very important. If it closes near the high, then how the next bar, this is a 2-minute chart, closes is even more important. There it is, a close near the high. Not necessarily a growing bull bar, but an equal size, closing near the high. So this bar here is very important, closing in about a minute, 50 seconds. But a third bull bar here, closing near its high, that's a lot of data that says reversal, which we haven't gotten yet, okay? George says, how do you know the next 3 candles won't barcode? It could then still go either way. This is all just probabilities, George. Nothing is 98% unless you're running very, very low reward to risk. Very negative. Okay. We're talking 55-45. You know, not 98-2 like a lot of traders think. A lot of sellers stepping in, buyers kind of stepping out. So you guys, something that's actually really worth noting here is we never tested above this bar. Okay, a lot of times when you see a bull bar closing near its high or, you know, a bear bar closing near its low, what I'll do is I'll set a stop limit, like with doubles or triples even more so, above the wick of the previous bar, which would not have gotten filled, by the way. Okay, and then I'll leave it for 15 to 30 seconds, depending on quality of the setup. And if it doesn't get a fill, then I have to cancel the order because the trade has changed, which is exactly what happened here. Okay, so now we're retesting that 20. No follow through. Okay, that's why this bar here was so important. If this bar had, you know, we had seen a 40-point bar closing near its high, all of a sudden it's like, okay, there's so much data here that a reversal just became much more probable. Whereas you still have to be hesitant here. Gabriel, congrats for the trade you took yesterday, by the way, when it almost hit stop loss, but then you stick to it, even when it finally went back to break even. I like the confidence you had on it. So, when you put on a trade and it gets near your stop, I think what a lot of people do is, rather than just take the pain of letting it hit your stop, which psychologically is painful to a degree, okay? Let's say I had a 40-point stop like I did yesterday, and it's 36 points against me. What a lot of people do is they'll say, well, I'll just save the 4 points and take it off, because then they kind of feel like they're in control, right? But that's a fallacy. And I think it actually hurts you, because a number of times, if your stop is strategically placed, like yesterday it was above, just above 20,500, saving yourself that 4 points, I don't think makes up for the fact that you're giving up the opportunity for it to reject and go down and hit target. Now, is there an element of luck in a situation like that? Sure, but when you put the trade on, it was more like 55% probability. And then as the trade develops, it becomes more like 50-50-ish. That doesn't change the fact that it was in your favorite entry, though. So there has to be an element of robotic management on these trades. Otherwise, if it's just entirely discretionary, and you're making these decisions once the probabilities shift to more like 50-50, well, now you're back in the same boat of just taking bad entries. So probability-wise, that trade yesterday probably should have stopped me out. It didn't. It turned around and hit target. The same way that a lot of trades will get, well, some trades will get within a few points of your target, turn around and stop you out. Now, what everyone will say is, wow, you should have just taken it off early. Okay, really? So I take every trade off early, and now my stats look like shit because I have a bad habit of taking it early, and now it's no longer robotic. Now I'm just making discretionary decisions 100% when it doesn't work. Okay, if you're newer, I'm saying. Obviously, the more experience you get, the more right you have to make discretionary decisions. But in that case yesterday, there was no reason for me to manage early. It happened to pay off. A lot of times it just stops you out, but saving 3 or 4 points on a 40-point stop out is an emotional decision. So, what trading platform? This up here is Ninja. That's Ninja Trader. Plugged in with Take Profit trader accounts, Apex funded accounts using Rhythmic and Tradeovate. And then this here is Thinkorswim, which I like their charts. I've used these charts for years. Hey, John, great to have you, man. Starts up Friday. By the way, if you guys want to join up the tomb like John did here, that extended stream begins Friday. 20% off today only. Tomorrow, it'll be less. And then Friday, that deal's gone. Okay, and that lasts for as long as you remember, by the way. So, man, we are sideways here. We need some kind of definitive move. And honestly, what would not surprise me at all here, you guys see we have a couple of touch points now. Couple of touch points. If we were to form an ascending channel, it's tight enough, but gives you enough space. And if volatility picks up a little bit and we start getting touches more often, ideally on the bottom side of an ascending channel, that's a lot of scalps to potentially take. But right now, there's only 2 touch points, so we could absolutely just see a reversal. This is no man's land for the next few minutes. Green about 1,200 on the day here so far. Seeing what else we can grab. I have found that with the liquidity in SPY, spreads are tiny and market orders are supreme. I keep my stop loss mental thoughts, says George. Mental stops are fine if you have the discipline to hit out. A lot of people, they'll use mental stops without issues for, a week. And then on day 6, they don't stop out, or they catch a big dump off and they aren't quick enough. And then you end up in a hold and pray scenario. So, if you're trading like momentum stocks pre-market, well, you have to use mental stops if liquidity is good enough. But in SPY, yeah, you're not going to have a liquidity issue. It's just a news issue if you get a big move and you don't stop out, or if you have discipline problems, even once a month can destroy your trading. So if you trust yourself, there's nothing wrong with mental stops. But you have to be honest with yourself. Okay, so here we are testing. It's looking more and more like we may end up seeing that ascending channel here, at least for the near term. Which honestly, I don't want. I would love to see a big dump off here to force the market's hand and get more volatility. That ATR is sitting at 20. And right now, what do we need more than anything is volatility. Why futures over options? Neither is, I think, better. They're just better for doing different things. Futures are better for intraday trading. They just are. Liquidity's better. Spreads are tighter. There's no PDT rule for accounts under 25,000. Options, you're dealing with big spreads, not to mention the Greeks, which add another layer of complexity, and theta decay adds another layer of having to have a bigger edge just to make up for that theta decay if you're buying options. So for intraday trading, futures I think are just the superior product, but options absolutely have a tremendous place in just generating revenue. Trading options spreads and sell to open option strategies paid my now wife and I's bills for a year, 12 months minimum, when we had very little money. So neither is better, they're just different. But this thing needs to make a breakout here. It will. Honestly, I would love to see this market fall 500 points today. But I'll trade what it gives us. How do you manage drawdown, especially with trailing drawdown on props? Well, there's no answer like, hey, do this target, and the trailing drawdown is no longer an issue. You're going to have times when it gets to your target, near your target, turns around, stops you out. That hurts the drawdown, okay? But in reality, the rules at props favor scalping until you have padding. Then they favor kind of like adding into winners and not having huge targets, but letting them run a little longer the more padding you get. Static drawdown accounts absolutely favor adding into winners, leaning into it, stopping out at break even, things like that. But with those static accounts, you're going to end up with, you know, the same amount of losing trades as you would on a normal account, a lot of break even stop outs, and a few big winners. With trailing drawdown accounts, which is most prop accounts, you should really, in my opinion, scalp maybe 10 to 40 point targets. Obviously adjusting size depending on how wide you're going. And then as you grow padding, then you can start leaving trades on a little longer if you choose to. Chris, I've lost way more money to theta than I have to flat out being wrong. It's disgusting, actually. Yeah, so just change the way you're playing the game. If you're buying short-dated options, I think there's a time and place, okay? The product exists for a reason. The reason isn't only to take money from buyers, but if you want to use the word like rigged, the probabilities favor the seller for a reason. Why? Because the seller is providing you a service. Whoever sells you the option is providing you the leverage to hold that option. So they have to get something in return for that. Okay, they get higher probability of being right. You gotta think about it, right? So I prefer to take the spread angle to capitalize on IV crush, theta decay, or just the straight up sell to open angle of options. And then there are some scenarios where you'll find, hey, this option is underpriced, IV's very low. I think this stock is gonna go much higher or much lower than the market is predicting it will in the implied volatility in the next like 3 weeks. Then sure, does it make sense to buy an option for 3 months out? In that case, it does. Most of the time though, it's gonna favor the sell side because they're providing you a service. Does Apex deny you payouts for stopping out at break even because your risk reward is blown? Well, if you're stopping out 1 or 2 ticks ahead of break even, then absolutely the data is going to look that way, and I think it's going to depend on the rep. Okay, which is why that for stopping out at break even with Apex, to save that reward to risk, I much prefer to just let it stop out at break even if it means that I lose a tick. Okay, because I don't want that data to look any kind of way to whoever's looking at it if they don't understand what you're doing. So this volatility, we're catching a little bit of a slow grind. That ATR is now sitting at 18.2. So waiting for some movement to hit here. If this ends up being an ascending channel, you guys can see clearly what I'm looking at there. I want my 3 touch points, and then I'll trade the outskirts, happily. The more aggressive upside an ascending channel is, the less likely I am to short the resistance. And the more likely I am, supposed to buy the support. I'm hoping, I'm hoping we see a slow boom kind of idea. Volatility by any means necessary is what I'm after here. So you know what's actually really interesting here? If we redraw this, you could end up drawing it like that, which broke. You could draw it like, I suppose, a couple of touch points like this, maybe 3 touch points if you want to include this. And now that's also attempting to break. So what I'm actually going to do is delete this trend line and let the market form something interesting to look at. You know, right now here, if you're like micro scalping, sure, but you guys see those wicks? There. See these wicks? Buyers and sellers are relatively equally matched until we see some kind of definitive move. Okay, so you're dealing with chop and a 51-49 probability at best right now. I'm not into that. I want 55-45 minimum. And still sitting green on the day. We're up like 1,200 bucks. Just one trade so far. Let's see what we can get. What we really need is volatility. Chat, I'm switching my strategy to only play for an hour, then walk out because market goes stupid in the afternoon. Yeah, you know what? It's all the same. You know, everyone asks, hey, what's the secret to afternoon? What's the secret to morning? What's the secret to Asia session? What's the secret to pre-market? It's all the same, but the morning is the least choppy. The New York Open plus, 3 hours is the least choppy. Once you start getting into like 1 p.m., 2 p.m. Eastern time, you really start to see more chop, less definitive movement because liquidity is down. Okay, so you can absolutely scalp at that time of day, and I do. But as far as finding edge as a beginner, honestly, I think Central Time speaking, your best bet is going to be 8:45 to noon. After that, things get a little bit more difficult. That doesn't mean always, it just means on average. The best platform for trading futures, if you were asking stocks, I'd have an answer for you. Futures is so heavily regulated, it's such a regulated market that there are not many that I have experienced just awful futures trading platforms. They're all relatively fast, seemingly. I like NinjaTrader, but it's a little different world with like stocks. With stocks, you have execution issues across the board. Schwab, like Thinkorswim, is a little slower. Robinhood is very slow because their business model, obviously, there's a middleman. That's how they make money. Then you have like Centerpoint and Lightspeed that are just essentially what you would call a direct access broker. Very fast, but you pay for fast with commissions. So now we're forming this very, very tight channel. You guys see this here. We're looking at pretty much 15 points wide with a lot of wicks, which indicates high probability of breakouts. Market's just trying to decide who's going to win here. Pretty evenly matched. Nope, George, no strikes. You just trade the current contract, and then there's rollover. But that's it. If futures, I didn't trade futures for a long time just because I was so focused on stock and options. But futures are I think I underappreciated them for a long time. They are a wonderfully designed trading and hedging product. But we're interested in them being a trading product, right? They are a beautiful trading product. They're built for trading and hedging, essentially. And they do it damn well. And this market has grown on me, the futures market, a lot as a trader. And you can get big in the futures market, by the way. It's very, very liquid. You can get very, very big. Much more so than like smaller cap stocks. If you're concerned about getting huge, which you can make lots of money in both. But if you're like, well, I want to get massive, like thinking huge, which I want you all to do, obviously, futures offer that. We all want to grow. What kind of funding do you need to start a futures account? 25,000? Do you mean a personal account? Personal account, I mean, really, technically all you need is the margin, but you want to have buffer, obviously. There's no PDT rule in futures. Listen, the futures market to me is like America. It's designed wonderfully, and they let you do whatever the hell you want as long as you can put up the margin. You can trade 10,000 times a day if you want. The stock market needs to take notes. I hate the PDT rule. It's un-American, it's anti-American dream. The futures market did it up right. Chicago knows what they're doing. Just waiting for a breakout here. I know we're kind of sitting on our hands right now, but what are you gonna do? This is the game sometimes. You want me to trade that? I'm not gonna trade that. That is some garbage right there. If you have a cash account on Webull, you avoid PDT, right? Cash accounts on stocks with any broker, any American broker, you avoid PDT, but now you run into a new issue, which is settlement. Now, recently, settlement has gotten better. It's T+1. You now have to wait just 1 day for cash to settle, and you can only trade through your cash one time in that period. It used to be T+2, which made cash accounts a little bit less doable for trading. But yeah, you avoid PDT by going cash, but for some reason, they make cash settle, which is like, I don't understand this system. It makes absolutely no sense. It's your money. You should be able to trade it 1,000,000 times a day if you want. Don't get me started. Yeah, Cameron, you can place as many trades as you want. I mean, I don't know, maybe Webull implemented some rule recently, but this is a regulation, so I doubt. You can trade through your cash once per day. I think if you keep trading, you'll probably run into that settlement issue, which is called a good faith violation, which you don't want. Hey, Brad. Hey, Nico, are you using Replicanto? Yeah, so Replicanto's I like Replicanto as a copier. ETP is also a great copier. Again, I had that copy trader issue with ETP. They made it right. They fixed it. Me and 4 other traders had the issue. They compensated all 5 of us for what we lost. Very professional. ETP is a fantastic copier, and they're very on top of it. They're a little newer from what I understand, but listen, their developers are like, this is what they do all day. Whereas, not necessarily the case with Replicanto. They're a little bit less responsive, but Replicanto is still a great copier. Hey, what's up, David? Good to see you, brother. Yeah, the futures market is really a fantastic product. Yeah, Cameron, just don't hit a good faith violation. You'll be fine. Just keep an eye on your cash. You know, when you hit good faith, it's not like you go to prison, but you don't want to hit it. Ooh, Samson, good question. I don't know. Personally, I wouldn't mess with copy traders on my phone, because if something goes haywire, I'm throwing my phone at the wall to stop it from, I don't know, man. If you can get your hands on a laptop, I'd go that route if you can. If not, I don't know. I've never seen a trade copier that is compatible on a phone. Well, here we are with wick after wick. Oh, there you go. A-Train, yeah, that's a good idea. Only way a phone would work with copy traders is with a virtual machine / server running NinjaTrader. There you go. There's a potential solution, but definitely, you know, a little sketchier than just running off a laptop or a PC or something. There's enough issues to worry about with copiers on a computer. But listen, if you're looking to take trading seriously, I know that this isn't the answer that a lot of people want to hear, because you have to start somewhere. But the reality is, I think, you know, it's worth taking a little money out of your trading fund and getting like a used laptop or something. You can get them cheap these days. Like cheap. You don't need a ton of computing power just to trade. So here we are forming this tight channel. Now again, that was about 15 points wide previously. We're now looking at a little more, closer to like 18 points wide. If we can get that really 20, 25 points wide, then it's time to start trading that channel. As it sits right now with all these wicks, breakout potential is very high. Why NQ over ES? Preference. I've traded both. NQ, I think long-term, actually commissions end up a little bit cheaper just because volatility is higher. But they're very similar products. ES is just a little more controlled feeling. A lot of futures traders, you know, 20 years ago got into ES just because that was the product to trade at the time. NQ is a more recent discovery from traders, you know, obviously over ES, which is why, and the volatility in Nasdaq is going to be attractive, which is why a lot of traders on the internet are going to be trading NQ over ES. It just shifts with time. ES used to be the popular product, which is why the old heads are going to be like, trade the ES, trade the ES. But the ones who know what they're doing will say, just trade whatever the hell makes you money. So you can trade ES, still watch the stream, me trading NQ. Very similar. Just trade whatever you do better on. Yeah, man, just get a cheap laptop, take it out of your trading fund, go find someone on Facebook Marketplace and buy a $200-300 cheap laptop used and just get started. Yeah, ES to me was very reminiscent of like Asia session trading on the Nasdaq, which is, it's just tougher for me personally. All right, we're testing this downside break of that channel. You guys see that? With all these wicks, breakout potential is higher, and here we are getting the test. Honestly, I'm hoping we end up seeing a test of new lows just for the sake of volatility. That would be fantastic. Not uncommon to get a little test at a bounce like this, and you actually look, we're rejecting off the 20 on the 5 minute. That's interesting to see. and then a push lower, but you know, it's still kind of early. Samson, once you go NQ, it's hard to go back to ES. It's so slow. Yeah, and listen, part of the reason is not only is it slower, and I feel like it's a little choppier, and I don't like getting chopped out, death by 1,000 paper cuts kind of thing. I also ran a calculation, I forget the exact numbers, but for an equal time frame move on average on NQ compared to ES, it seems to me that the commissions on NQ are a little bit more affordable than on ES, because you get more of a move out of the same time duration. Now, I'm weighting it, obviously, to the price of the product. I'm not just saying just straight up points. I'm saying ratio-wise, like percentage-wise, on average, NQ is going to move a little bit extra compared to ES in the same time frame move, if that makes sense. Which, when you run the numbers on commission, makes it more affordable. Yeah, you know, David, I agree. I took the plunge and invested on Mac Studio so I can run everything flawlessly, including parallels for copy trading. Technology is a non-factor, especially when making quick money decisions. I came to this conclusion years ago. If you can justify it and you can reasonably afford it, you don't have to be, you know, some kind of wealthy whatever. If you can reasonably afford it, just max out the technology. Now, if you're trading, you don't need this crazy PC. Okay, but if you're running a ton of charts, you're running 3-4 monitors, even just 2, just max that shit out. It's not worth, you know, now again, if you're getting started, buy a $250 laptop, for real. You don't need a lot to trade. But if you're like, okay, I'm serious about this, I want to make a living from this, just max out the tech and avoid issues. And write it off and avoid issues, assuming you're making money off it, right? Because someday, if you're trying to trade for your career off of that same $300 laptop that you started off of, and you're trading big money size, someday, 9 months down the road, you're gonna have a computer crash, error, or something is gonna happen. And it's gonna cost you way more than just buying the new, you know, $5,000 PC, whatever. That's my opinion on it, at least. Now, you never get rid of the risk completely, but you can definitely mitigate it. Okay, here we are getting this break downside. Now look here, guys, you're gonna definitely see some stops. I love hunting stops in this region, and absolutely in this region. The wider bulls are gonna have their stops down here. The tighter bulls are gonna have it here. Both of which I would say right now, I'd say this move here probably takes the cake in terms of how many stops are sitting there, stop sell orders. But you're definitely gonna see some here as well. If we can get a test downside through here, I'd say this is good for about a 5-point move downside. And this here is probably good for some liquidity as well. Yeah, so somebody asked, what do you do? This is a problem. What do you do if you are copy trading and one trade closes and the rest don't? Do you just go one by one? Okay, so I had a conversation with the developer of the ETP copier. Well, hang on now. See that? I mean, oh, come on. What is that, a 4 or 5 point move? Maybe a 4-point move. I was off by 1 point. So what I really want to see is this break downside, and we can start making a move downside, and we can potentially ride that trend coming in to the test of here. But this needs to give itself up first. Okay, so copy trading, one order closes and the rest don't, or you have randoms that don't. I had this conversation with ETP. The developer is trying his best to fix this ghost position problem in NinjaTrader because sometimes they're real positions, other times they are not real positions. When they're ghost positions, that is a NinjaTrader problem. And what happens is if you go flatten one by one, if you're long one contract, you're actually long 0. But the copy trader sees it as you're being long 1. So it sells and it opens a short. Happens all the time. ETP's trying to figure it out. I pray that they do. Replicanto, I don't know if they're working on that, but it's an existing problem in Replicanto. However, if you have this problem and they are real orders, which it's difficult to tell, or if you're not using NinjaTrader and you can have a high level of confidence that they are real orders, then you have to go one by one. That's part of trade and prop. Part of trade and prop. Just part of the game. Hopefully it won't in the near future, though, if we can get a copy trader that fixes that issue and takes the cake. This will be a free market situation. All right, well, we tested that low, took out the stops. Buyers are attempting to take hold now. Let's see if they can. Yeah, or you can just hit that flatten everything hotkey. You should avoid problems. Hasn't always been a perfect solution for me, though, that hotkey. All right, here we are getting that retest of the 20. No decision out of the market here yet. Because you see here that this ascending line that could be forming, that broke. Okay, so now we have 2 touch points. Whereas really, to draw any kind of meaningful trend line, you kind of need 3. Otherwise, people don't see it enough. Just a heads up, guys, that Apex sale, 80% off single day pass if you use code BIG, which is my code across Apex, Take Profit Trader. It'll always give you the best deal no matter when you enter it, by the way. That 80% off sale at Apex is going to be ending relatively soon, within the week. Here's the 20 on the 2-minute. Now the 5-minute, again, the 5-minute is going to get less tests, but be more relevant when it does test. But for context, an exponential moving average is never enough on its own for me to take a trade. I only use it as supporting factors for other trades. This is a 2-minute chart, by the way. Well, guys, starting Friday, if you look at the chat, right now, I'd be off to stream only to members of the Tomb. 20% off today, won't be that come Friday. So if you want to get in there, you can lock in and pay 4/5 what everyone else pays. All right, guys, that's going to be it. I'll see you guys back here tomorrow, 8:15 a.m. Central. Have a good day.